Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Sunday, September the 26th. The year is 2021. Let's talk trading. It's time for the weekly open and gap. As usual, these videos for educational purposes only. Your results may differ from mine. So, we take a look at the weekly chart, and we can see that the pound dollar has gapped down by 11 pips. Now, the thing about it is, depending on your broker and how they play the spread when the market opens on Sunday/Monday, it makes all the difference on these gaps. That's something that I probably I take it for granted, but there might be some of the folks out there, especially new viewers, that might not be aware of it. So if I hit the Alt T button, you can see the spread's about 18 pips right now, which is pretty crazy. So these are bid candles. In other words, the price isn't the closing price, it's the bid price. And so what that does is it kind of distorts things at times. And that's just something for you to be aware of. Because unlike, say, if we were trading pound dollar, the commodities, the minis, for example, or futures, we'd be getting last price, and it makes a big difference as opposed to how the charts look. It's just something to be aware of. And we look at the daily. We're putting in the opening range for the week. We're inside the opening range for the year and only 15 pips above that yearly open. So this 3640 area, which is a launch pad, the 40s is a launch pad. Is this something to be aware of? At least I call it the launch pad, because I usually see price launch from the 40 to the 60. Doesn't matter if it's near the open or not, the yearly open. Just seems like when price gets to the 40 area, it likes to launch to the 60. So right now we're just 14 pips above that yearly open, 98 pips off the monthly open. And we only have 4 trading days left in the month. And as you can see, right now we are below the inside bar that happened on Friday. And I'm getting to you, or coming to you, a little bit earlier than normal. This is the first hour. I thought I would do that only because I want to watch football later tonight. So I thought I'd put the video out, so might be able to show you a few things that I normally, if I show you it's hindsight, I can show you it before it happens now. So maybe you'll understand a little bit better. But one thing to note, we have broken out of that lower wick zone from the previous day. And we're just opening up the buy zone here. Let's see, let's shift over to a 5-minute chart. Normally we have it on the 1 hour. So you can see we're 32 pips below the previous day's pivot. We gap down, so we want to fade the pivot, we want to fade the gap. So we're going to look for a long somewhere here. Maybe if price comes back across that weekly daily open, since it's one and the same today. So we want to see this candle turn green if we trade this hour. But chances are, depending on your broker, you probably don't want to trade the first couple of hours because of those crazy spreads, as I showed you earlier. Rats, of course, the range is too low. We just started. Levels to note, the weekly pivot, 136.75. So that needs to be taken out. Statistically speaking, that is. And we're looking here at the pivot trading plan. Daily open was below the pivot point. So it hits the pivot point, the bias is short. and it looks like we have a moderately bear day for trading. So below the daily pivot point, we have a missed pivot from September the 20th also to take a look at. We missed last week's pivot, and so far we haven't hit today's pivot, but we're just starting. We're only 15 minutes into the day, so a lot can happen. So let's see if in the next 4 days we can clear the deck on the weekly pivots. The wick zones, as you can see, looks like we're right at the edge of the wick zone here, the lower wick zone from the previous day. And on the ranges, we looked at the ranges at the end of the week like we normally do, but there's something I wanted to go over about the ranges, and it has to do with the percentiles. Now, if we look at what's going on right now, it says high minus close is 3. That's in the 16th percentile. So basically, there's out of the last, but actually we're only using 12 bars, so it's not as statistically significant as if we say used 1,000 bars. But I switched over because Walmart he says he likes to use, he just wants to use just the most recent data, so he picks like 12 days, 12 weeks worth of data to do it. Sometimes when I'm running statistics, I want to use as many bars as MT4 will let me. That's usually about 5,000. But depending, 5,000 days ago, that's a lot of time, and it's, what happened then may have little to no bearing on what happens now. And it depends on what you're trading and how you're trading, if you want to use a lot of days or a lot of bars versus just a handful. So, and part of the reason is especially if you're only trading during certain hours of the day, that's your time, then you probably don't really care about what happens outside. So that's one of the reasons on the frequency distribution you can set start and end times. But I digress. So let me get back here. What we're seeing is only 16% of the time is it going to be 3 or less. That's based on the statistics. So chances are it's going to be bigger than that, and you can see that right here. So what does that mean? That means that this number, high minus close, the result should be bigger than 3 by the end of the day. So if you're near the high, and this number is only 3, now it's 4, chances are price is going to keep going down based on statistics. So what could happen is that you might take a trade and then it goes against you and price still goes up, but by the end of the day it comes back down. So like with the rats, the rat zone's dynamic. If price keeps making a new high, then the red rat zone keeps going up higher. But at the end of the day, price ends outside of the rat zone. What you want to make sure is that your average price is within the rat zone, so you can punch out for a overall profit. And I'm not sure if I've made that clear before. I'm not saying that you should average in, especially if you're new at the game. But for the more experienced traders, for those who really understand what you're doing, yeah, that's definitely a strategy. And using this tool, which is the TRO Smart Ranges indicator, that will definitely help you. And that's one of the donationals. Okay, let's see here. What do we have? TROPA simple template, the price action to simple price action template. And I usually like to put this on the M5. And this is, once again, high minus low here, the 1 percentile. Last 100 days. Chances are, by the end of this hour, it could be bigger than 6, even though it's the first hour. And we'll just have to wait and see. And how you would use this is if price is near the high or near the low, and it's still with a low percentile, then if it's near the high, chances are it's probably going to go up. And if it reverses and comes down to the low, chances are it's going to go lower because it has to expand this range to get within the percentile. But of course, you have to realize that out of these 100, there's got to be one of the bars down here at the 1% range. So hopefully it doesn't happen to you when you're trading. And you can see here we had a gap, and then the gap just filled. That's something we notice on a regular recurring basis when we do our day trading. Sometimes we'll see price gapped up or down. We'll make a note and we'll look and maybe take a trade in the direction of that gap fill, even on the 1 minute. And I've been working on some new ideas I had. I think probably everybody's heard regression or regressing to the mean, that price will come back and hit that squiggly line moving average. Well, one of the things I noted, and I may have showed the indicator before, I made a multimeter that has close minus a moving average. And what I noticed was if the price got away from the moving average, say like on the M1 chart, if we have a bar that and the price is more than 3 pips away from that moving average, price usually returns to not the moving average, but to the open of that bar. One of the things that I have is those TRO return bars back from 2018, where you can put in a number and see a number of pips for the range of that bar. So for example, on H1, I think we usually use, no, on M5, we use 10 pips. And what happens is if you get an M5 bar that's 10 pips or more, chances are price is going to return to the open of that M5 bar. So I noticed that if price gets above on M1, if it gets above the EMA 5 by 3 pips or more, chances are it returns to the open. Now, it might take a few minutes for it to do it. It's just not gonna snap right back. But overall, it's just one of those things where when I start tossing out prices and levels that price will probably hit, that's just another one of my tools that I use to make those quote unquote predictions, or that's how I'll form a bias which way I want to trade or what I think is an opportunity. And as you can see, price action right now, the movement's really slow. And there's this huge gap right here that needs to fill. So, fellow traders, hope you had a fun and safe weekend. And if you like watching football, I hope your team wins, unless it's the Dolphins, because you're playing my Raiders. And I don't like any team beating my Raiders. Anyway, if you have any questions on what I went over today, feel free to post them out there in YouTube land or Facebook land or Crestlick land or wherever you can find me. And as you sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.